Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Thursday, November 11th. Happy Veterans Day. Thank you so much to any of you that have served or lost loved ones serving. I really appreciate that. As far as markets go today, of course, the stock market is open, but all governmental offices and the bond market is closed today. We had a very busy day yesterday with all the macro data points being pulled in early. So we had a lot of moving pieces. So let's get into it. It's 6:53 as I'm starting the video, a little later this morning than usual. Even though I got up a little bit earlier, there's a lot of chart work to do this morning. And reminder to anybody new, please run the video at 1.25x to make good use of your time. I don't think you'll miss a thing. In fact, some people go up to 1.5 times and slow it down when they hear something interesting. Taking a quick look at markets, we're bouncing this morning. Equities are up between 4 and 0.6. Oil's down 1%. Gold is up 1%. Silver's up 1.5%. Copper's up 1.5%. Bitcoin's down 1%. Over on the earnings front, this morning we've got Yeti coolers, Wix, Celsius energy drinks, ArcelorMittal Steel Company. That's going to be a pretty interesting one in the steel space. I saw some interesting trades yesterday on U.S. steel going out to 2023. So there was a big bet on steel yesterday. U.S. steel going out, over a year. So what is that? 15 months, something like that. So that was interesting. So steel will be in focus today on Arcelor. After hours, we've got Blink charging. That has seen a big jump. I mean, the EV space and the charging space and all that stuff. Rivian yesterday throwing everything into turmoil with that big IPO. And then after hours yesterday, we had Affirmed doing a moonshot. SoFi did really well. On the flip side, Beyond Meat absolutely cratered. It was down like 20%. That thing, I have not taken a close look at the chart, but just from memory, that was a huge level to lose. And they had a miss across the board. They had a revenue miss, profit miss, and weak fourth quarter guidance. So maybe the bloom is off the rose on fake meat. There was that big surge, where it got into all the stores, it got into all the fast food places, and I just don't think people are buying it. It was a novelty for a while, more expensive than regular meat. I don't know where that stands now with the big jump in food prices, but I can only assume that the Beyond Meat product is still more expensive than regular meat, and maybe it's just priced out or kind of run its course. We'll have to see. So let's get into it. U.S. dollar. Big move, big breakout here, and that's something we're going to want to watch. We're definitely in an uptrend now. I mean, no denying it. I thought that with this consolidation, there was a chance that this would roll over, and we haven't seen that. We had a big jump in rates yesterday, and usually in a rising rate environment, that's going to be supportive of the dollar. And remember, the dollar is a shell game. You've got 60% of the dollar index, even a little bit more, 62, 63% being the euro. The next most important one is the yen at about, if I can remember, maybe about 20%. So the dollar index is a relative game between the dollar, the euro, and the yen. And when the yen and euro are falling, the dollar's rising. That's usually a headwind to commodities. That's usually a headwind to precious metals. But what we'll see going forward is the commodity complex, which is generally regarded as a inflation hedge, oil being the most important, are definitely in uptrends and kind of going against the conventional thought that a rising dollar is going to stop a commodity advance. We really haven't seen that yet, but we're going to have to keep a really close eye on the dollar as we move forward here. And don't forget, rising dollar is, they call it the dollar wrecking ball. Watch EEM. I didn't look at the chart, but I'm sure that was a big red bar yesterday. Rising dollar is bad for emerging markets. And we saw that a little bit a while back on this move. So if we're going to be in a rising dollar environment, that EEM chart is going to be most likely in bearish mode. So here we are, big jump in yields yesterday. We had this head and shoulders top. We had a breakdown, a back test, and then a moonshot yesterday where rates were up 9%. They were even higher midday as that 6% CPI inflation print hit in the morning. I've got the breakdown on the blog this morning, and gives you the details on that. I also did a little bit more than usual on a write-up on yields, inflation expectations, what I want to say, asset classes that will likely do well in an inflationary environment, and those that will do poorly. So please take a look at the website to pick up on that. To make matters worse, I also made note on the blog site that yesterday, remember, we had a 30-year bond auction at 1 o'clock, and I'll be the first one to tell you I'm not a bond expert, but listening to the commentary and reading some of it, it was one of the worst ones these seasoned bond experts have ever seen, like going back into the early 2000s or even 1990s. There was just, nobody home. Nobody wants to buy a duration bond at 1.9% when you got inflation running at 6%, right? So you saw yields lift across the curve. I think 2-year rates were up 10 basis points. We had 10-year up about 13, 14 basis points, was as high as 20 basis points, and we had a big rise in the 30-year as well. So that rising rate environment, but keep in mind, real rates are falling. And that's the difference between the rates that bonds are paying and the inflation rate. So, if you're getting, let's say 1.5% on a bond, but inflation's running 6%, that means real yield is minus 4.5, right? You take 6% from 1.5, you got minus 4.5. So that means, to put it simply, you're getting eaten alive. And that's where all those inflation hedge type trades like gold and commodities, real assets, are where you want to be in as far as asset classes go in an inflationary environment. And remember, most of the The last time we were in an environment like this was the 70s, and most money managers have never seen an inflationary environment. So I think there's going to be a lot of turbulence out there just from a standpoint of people trying to figure out. And I think it's going to be really, really choppy. So you can see here TLT, big rise in rates means a big drop in TLT. And I think yesterday we said, resistance is resistance until broken. And it went right up to the top and then got slammed back down. I mean, that is, and if you took that short trade, congratulations to you. That was, just awesome. Even if you didn't get it right off the, even if you didn't take it the day before, if you instantly recognized that, you probably got a good part of that. So that was a nice trade. So just goes to show you the power of these principles. We dropped out of a trading range. We came back in. We said, when you come back into a trading range after you've been out of one, the target becomes the opposite side of the box. We got that right up to resistance, and now back in the trading range. So that was quite the trade, quite the move. VIX, of course, yesterday with the turbulence, popped up. We're at 18.75, right in the middle of this intermediate range between 20 and 18. Right now, it's all about trend and direction versus an absolute value. If you see a move up towards 20 and even a breakout above 20, that's going to mean a lot of turbulence in equities, and you're probably going to be seeing a lot of red bars. On the other hand, if they can knock it down below 18 and start trending lower, we'll probably be lower this morning with the bounce, but we'll see how far and how long-lived that bounce is. The oscillators, of course, were down on a down day, so now we're back down in the middle of the range. Moving on to SPY. Our levels, if we go across the board, and we're going to do that right now, you're going to see the levels were very, very helpful yesterday. And actually, I got a couple of DMs from guys in the group, traders, saying how much they appreciated these levels. And I might not always get the trade right, but I think my levels are pretty good. So let's get into it and see what we can learn about the indexes and FATMAAN. So here we dropped out of the wedge. That's a sell signal. Anytime you drop out of a channel or a wedge, that's a sell signal. On that time frame, we came down. We had that initial big sell bar. We had a little rise, then it got slammed, and then we had that deep look down for a touch of 462, and then it put in this hammer look. So this morning, whenever you see a hammer like that, that is the beginnings of a reversal. And so now we've got a pre-market bounce, right? So once we break back above 464 here, that will be a good place to use as a pivot. As long as we stay above 464, then we may get that 3-bar reversal as long as it holds. What's the 3-bar reversal? Down, down with a hammer, then a break above. That's your 3-bar reversal. And then you can set your stop right below 464. Now, what would secure it or make you feel much more confident in that long position would be then a break above the downtrend line and then a recapture of this, first of all, 466 and then 468. And you can see these levels right here on the 30-minute chart. Here's our here's our, on this time frame, you can see that 3-bar reversal starting. You got a down, you got a little doji, and then you got the green bar. So a break above 464 will be bullish as long as it holds. And then what would make you feel more confident is a move back above 466, and then you can move up your stops. So if we're up in the pre-market, then we may get a back touch of 464 where you can be a buyer with a stop just below. And then if we reverse and go up and take out 466, that would be a perfect time or place to raise your stops just above or just below 466, and then you can stay long in the hopes that we get a follow through and move back up towards 468. Let's move on to the Qs. Okay, so we were in the downtrend. We lost this wedge with the move up here. You can see the thin brown line that marked that wedge. We said whenever you move out of a range, then you move back in. Your target becomes the far side of the channel. I'm going to call this a touch. You know, depending on how you draw this line, you know, I could jack around with it and, you know, move it, make it fit. But I'm going to call this a touch. Okay, so I'm going to call this, give a check mark to the bottom of the channel. Now, we're going to have to see, you know, if that holds. But for now, I'm saying that with this big red bar and then this reach down and hammer look, I'm going to say that's the start of a reversal. What kind of solidifies it and makes you feel better that it really is get a nice green bar here out of the gate this morning that holds 390. And then if you can hold 390, then we've got an opportunity for follow through to recapture 394. And then above 394, I think that would be a big technical event because you will have recaptured the midpoint of the channel after having went down to revisit the low of the channel. So that's what you would want to see on a reversal. Now, what would it look like if it failed? Well, you come up here, you have a good initial surge, maybe come up to 394 and get rejected because there's going to be resistance there. And so if you see a stall out at 394, chances are you're going to get that, you know, rollover look and then come back down towards 390 for another test. And we can see that here on the 30-minute chart. You can see that reach down here. We put in this hammer bar with a green bar close. And so now we're sitting here at, what are we at? 389.50. What you want to see is some follow through here this morning and then recapture that level 394 that I was just talking about. And that would be a location to either anticipate or be aware of a potential rejection at that level. You can see here, whenever you're not sure, you can look to the left for structure, and where you see the large volume over price bar, that's where your resistance is going to come in to the highest degree. That's why, you know, here in this void, it's going to be easier going to go higher because there's not a lot of technical resistance in this area. But as soon as you get up to 394 to 396, that's where the tough work begins to see if the bulls really have the power. You've got a layer here at 394. you've got the midpoint of the channel, and then you've got 396. And then if you get above that, 396, then you're back into more or less clear sailing. So moving on to IWM. Very much the same kind of look. We did break the 2-hour uptrend. Technically on a sell signal, whenever you break trend, whenever you break the low of the channel, you're on a sell signal. We reached down for a perfect touch of this 236 level that we had from this prior low area. Now this morning, what you want to see is a convincing break above 238, and that would be your 3-bar reversal. 1, 2 with a hammer, and then a green bar follow through to recapture not only 238 resistance, but also the bottom of this rising channel. And then you're back inside again, which would be a good technical achievement. On the flip side, of course, if you lose 236, if this were to come up and then roll over and lose 236, I think you're going to come down to 233 almost immediately. And then as we see here on the 30-minute chart, that's going to be your kind of your important level as far as breaking out from the huge consolidation. Here it is on the weekly chart. I just wanted to show you. We broke out, then we've had, a pullback. We want to stay above this 232, 233 area by Friday to say that the breakout is still intact. One thing we certainly don't want to see is a move back below. That would make this breakout look fake, and then we could see, follow through to the downside. So this morning, I would just key off of 238, and I've left this filled gap in where you may see little areas of resistance on the way back up. Here as we start the FATMAAN names, I want to thank any new people to the channel this morning. Certainly appreciate your time. I hope the commentary and the levels will help you in your trading. Please hit the subscribe button and the alarm bell, and I will do my best to keep you fully stocked with ideas and up to speed on market observations, that kind of thing. And if you look over in the show notes, there's a place to a link to jump over to the blog site, register for all my content with your email address. It takes all of 15 seconds, and then you'll get everything that I produce, and you'll get notified in your email box, and you'll also get an invite to our trading room, which is a nice place to spend time during the day. A lot of fresh ideas and camaraderie in the trading room. So you'll get an invite for that. And of course, longtime viewers and supporters, thank you so much. I appreciate you doing what you can to help me build the channel by passing the link along, letting your friends know, and I appreciate that. So, moving on to FATMAAN. Kind of a rough day for tech after a nice run. We have Facebook really more or less moving down the whole day with a little bounce at the end. I think today what you've got to see is a move above 328 to get long, and then have your stop just below. And I think you could see a move back up towards 333 if there's a little power behind the bounce. Otherwise, of course, anything anything below yesterday's low at 326 is going to open the door for a further pullback. I think your first stop here, again at the large volume over price bar, this 323 is going to be a really important level because, one, it's the largest volume over price bar there is on the chart. It's where the most activity has happened. You lose that level, I can almost guarantee you that this gap will fill, and then we're right back down in the in the soup again, down here at 317, and then possibly even come back down here to test some of these lows. So if there were ever a thick line to draw on your chart, it's at 223, or excuse me, 323. That's a big level that that needs to hold. And you can also see right here at 328, there's a sizable volume over price bar there. So if it can get above, then it's going to be a little bit easier sailing. Apple, gap down, big look below that bounced up back to this this original gap level. Again, that shows you that muscle memory of price, because really, if you think about it, this level here didn't really have much to do with anything except the gap, and it went down. They bought it back up, but then could not break back above that level at 149, and then it kind of rolled over. And I think it's interesting to note where a lot of other charts had a positive final bar, green bar to end the day on a little bit of a bounce. Didn't see that on Apple, and now we're kind of here in no man's land. I think the door is open to 147. If it can recover 148.50, fine, but then it's really got to get above 149 to really do anything. So I'd be careful in here trying to get real cute for a day trade, because you've got several overhead resistance levels that look significant. You've got two big volume over price bars here. We've seen that this level has been a problem. So from a technical standpoint, yes, if price breaks back above 148.50, out of the textbook, you can be long, but I think you may find it hard slogging, just either not go anywhere or even get rejected. What I'd rather see you do is, let this thing get going. I mean, we've been trapped here for quite a number of days, not really doing anything. And, if you're trying to actively trade it, when you get in a situation where a stock hasn't done anything for 2 weeks, trapped in a $1 or $2 range, it's just hard sitting there all day with a position waiting for something to happen when there's not a lot of power or a breakout happening. So kind of be careful with that. Tesla, nice technical action. I mean, we talked about yesterday this key level of 1,000, and we opened out of the gate and went right down to that level and undercut it a little bit, and then got that technical bounce. So I mean, that was a nice trade. In fact, you had a couple of chances, because here was the this must have been the first bar where we went down, we undercut that 1,000 and quickly got bought up, and then they made a quick run to 80, came back down, and went back again. So if you were a sharpshooter on Tesla yesterday, there were definitely some opportunities. Number one, on the recapture of 1020, That's a technical buy, right? Recapturing a level from below. So you're long into resistance. You had 2 hours to figure out it wasn't going to break through. And then an opportunity, if you took it or were good enough to recognize it, to be short, you went back down to the bottom of the box, and then that held, and then you had a nice final bar. I know it sounds easy to say, go long, go short, go long, but you've got the levels to help you. You knew 1020 and 1080 were support and resistance, and if you trust the levels, you can be long or short against them with stops on either side. And hey, if you get stopped out, you got a paper cut and you're wrong. Now this morning, you break out above 1080. I mean, there's some news out there. Elon sold, a bunch of shares and all this kind of stuff. Good luck trying to trade that news. Almost impossible, if you ask me. Trade the levels. If you see a breakout at 1080 and you can get it with a stop just below, you've got this void in your favor. You got an open shot to come back up here $80 higher to 1160, 1170. I would think that would be an awesome risk-reward type trade to make. I'm not sure where it's trading pre-market. I mean, if it's trading, 1120, you can't really do much with that. If you open here in the middle of the range, you got to hope for a quick backfill of the opening gap. And then if 1080 holds, you can get long and against 180, and then see if you get follow through back up to 1160. Now see, contrast that example with Apple, where it's hard to see on the chart, like, where are you going to make money, with this thing trapped in a range. Whereas you go to Tesla, you can actually see a much nicer opportunity given the void, given the rug pull and the consolidation. You've got clear levels that have been tested multiple times. Look, 1020, test, 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 test. It held. Resistance, 1080, test, 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 test. 4 tests of 180 or 1080 and 4 tests of 1020. You know exactly the levels that matter. And if you can take a shot with price near one or the other with this void here, then you got a chance for price to make a dynamic move. And there's a very sharp trader in the room. Other people have said it too, but she says it often. Her name is Penn. It only takes one. She's an Amazon sharpshooter. It only takes one. It only takes one contract and one trade, to go from 1080 to 1170. You got yourself a nice day. So that's always something to keep in mind. Microsoft, very easy setup. We'll see what it does. You've got a very clear pivot here at 332. I think on a recapture 332, you can be long. Notice the volume over price bar here, large. You get over that, then you can go back up here to 335, potentially 337. You get rejected there though, you've got room to roll down to 327, which is $5 lower. So if things start falling apart, I don't see much stopping Microsoft from rolling down to 327 if things get kind of wild. Amazon, here was, if you were a sharpshooter, you had a strong morning and you had to reach back to the prior day's close right here at about 3,500. That actually the first couple of candles reached back to that level to to the line that you had drawn. So that was an opportunity, maybe not the easiest in the world, but there was an opportunity there to get long. You got a quick move into this gap. You had to sit through a pullback or just get out of your position. Either way, that first opening move would have been a big one for you. And then you don't see this all the time, but it's not uncommon either, where you get a perfect gap fill and then a rejection. And that's what happened yesterday. And so when you are trading, put that in your memory bank that whenever you fill a gap, it is, technical event completed. And whenever you have a technical event completed, you need to wait for more information to find out what the next technical event is going to be. And so in this situation, okay, we got the gap fill. Now, are we going to break out and go for more? Or is there going to be a rejection? And in this particular case, we got a rejection. Now, I'm not saying it was easy. I'm not saying it was obvious. But it certainly would have been objective to say, okay, we made the opening move and we came up and filled the gap. What else is going on? And you're looking on the board, right? You got all your FATMAAN names up. You're watching the indexes. What are they doing? You got a power bar, and then you got two tiny bars that can't get over gap resistance. It would have been very objective to say, you know what? Either one, I'm getting out of my long, right? It doesn't look altogether all that promising with the market starting to pull back and having this gap filled that it can't get over. I'm getting out of my long. That's one decision. Now, the next decision is, do you want to be short? And whenever you're at a well-defined point on the chart, it's always objective to make a trade. So at this point, you could have gone short with a stop just above. That's no guarantee that it's going to work. Could have been a nice big bar green next, but then you're stopped out. But in this case, it went the other way, and you got a big payday if you took that. So also on the way back down, look at the levels. Stopped right at this 34.60 level that we had marked on the chart, to the penny, and then came back up to this 34.95 level that we had on the chart. So, there were a couple of good opportunities in there. And so when you're looking at trades or recapping the day, kind of recreate what you were thinking and, make some notes. I got it right, or I was thinking something else, and just put that into your memory bank. Google, pretty much down all day, came down. Remember, first touch of the gap usually holds. We got a touch and a bounce. So today, 29.25 is your pivot. If you can break above, you got the 3-bar switch, 3-bar reversal. You can take it long with the stop below. If it gets rejected there and comes back down to the gap, you probably get a gap fill on that second run to the gap. Netflix was weak all day. Opened up, made a touch of 660, then rolled over, and then lost the prior day's low, and then had a little green bar up to close the day. So 645 is your pivot. As long as it holds that, the door is open to 660. But if it falls below, I think you're going to see some support come in. 640, 635. But below that, you're looking at a fill of this gap. Semis. Semis got some work to do. Why? Because it lost this large volume over price bar here. And so now we're below kind of this 295 key level. And I think the door is open for a move down to tag this rising trend line that it got really far away from. So for the bulls to kind of save it, I want to see price get above 295. Rising rate environment, not that great for housing. Made a tag of this high and pulled back. So we had flagged this yesterday. So now to kind of get going again, we've got to break out above 76.5. Otherwise, price is going to pull back to at least the 8-day here at 74, and maybe even pull back further towards 72 and the 20-day. Quick look at gold. Or gold miners. I have the gold and gold miner chart on the blog. Take a look at it. We broke above the 200. Now your 200 is good support. We're up again this morning. So a break above 34.75 will send this into more of the upper end of the range. I've got some resistance at 36. Then we've got a gap to 36.5. So let's see if gold can keep the pedal to the metal and move forward. RSI and PPO look good. Oil had a bad inventory. There was an unexpected inventory build. I mean, gasoline, heating oil, all that stuff were inventory draws, but there was an inventory build on WTI in Oklahoma, so didn't like that and pulled back. But I think we're definitely in an uptrend, and I'm leaning to the bullish side, looking for dips, looking for breakouts. Inflationary environment. If inflation's raging, I think oil's going to be going higher, plus all the other stuff that's been going on. So, okay, a lot happening yesterday. Let's see if the follow-up happens today. Let's see which way it breaks. Do we stabilize and kind of move higher? Do we tread water, or do they want to sell it down some more? So we'll just have to wait and see. Hope you benefited from the video. A little longer than usual, but I hope it was worth it. This has been Chris Buss with Trader's Profit Compass. Talk to you next time.